Hey, good morning, Forex traders. This is Vance Williams out of the Seattle, Washington area. Welcome to my morning Forex trading show. I think I started a few minutes early, so what can be wrong with that? Anyway, it's Tuesday, December 2nd. We've been a little cold up here in the snow the past few days, but I think it's going to start warming up today. I know back east in places like Buffalo, the snow's been unreal. Hope you guys are hanging in there. To see more about the show, make sure that when you click the show, let me just show you real quick. You click be part of the conversation right here. And what that's going to do, sorry about my cough. What that's going to do is give you, if you want to, I used to email all the time to let people know about the shows. They're saying, hey, I don't get your notices. You need to follow me on Twitter. Email's just too unreliable. I'll send some emails out and kind of remind people of that. But you can click there and follow me on Twitter. It's Forex Art of War is the username. And you can also go to my website here at forexartofwar.com. I'll just show you here if you're looking for those books, 8 Things They Don't Tell Forex Traders, and The First Battle. You can get those there. And also be sure to check out the training, our new training packages. They're not currently available, but you can take a look and let me know if you have any questions. All right, so look at this funny thing they put up there, moving like a Shaolin priest. That's what my staff thinks about my analysis. Anyway, I thought that was kind of funny. Cute graphic, you guys. All right, so let's get on to business here this morning. You can see price is on the move, as I said. We'll be taking a look at that in just a moment. Before we get there, I want to stress that what I do on this show is for your educational purposes only. Let me see if somebody's emailing me and telling me there's an issue with my show. No, looks like we're okay. Okay. In fundamentals today, Wednesday, today's Tuesday, but Wednesday, tomorrow, we could get a big move from the ADP non-farm numbers. Thursday and Friday are big days for sure, with central banks on Thursday in the UK and the Eurozone. They're going to get their chance to say something. This Friday is the first Friday of the month, so we'll get the official non-farm payroll data numbers. That's 8:30 a.m. Eastern. So we've got some stuff coming here. Fundamental sentiment for the euro dollar remains neutral, medium term, and bearish long term. And maybe I'll talk a little bit more about that as we go on here. But there's no further high impact data for the pound, the euro, or the dollar this morning. If you trade the Kiwi, there's some that's tentative and some that's at 7:30 p.m. tonight. And that's how always talking Eastern times, even though I'm on the West Coast. On the top performing bank trades, not much is happening. One of the top 3 picked off 50 pips from the euro yen. Another put a pending sell order up around 158.00 on the pound dollar. Of course, it didn't get up there. Let's just pop over that chart for a moment. You see, it didn't get up there, but they were, they're looking to say, hey, if it gets up there, we're going to go down. So I think on our main pairs, the big banks are doing what we thought. They're looking at a longer term bullish dollar. But at this time in particular, the fundamentals are neutral until the central bank's data comes out this week. So we're neutral right now for the next legs down on the euro pound. I said I might talk about medium term. If you've never heard me talk about that, what I'm talking about is the 6 to 18 month vision, 6 to 18 month vision, and how that can cause, these movements in the US dollar. For example, the euro dollar, our next leg down, we're looking at maybe 122.50 for the next leg down. But we need those fundamentals in place. They're what drive that move, that next move down. And we don't have that in place right now as I speak. It could change any moment. Okay. I also said that we've got long-term trades. I think we've got evidence in the world that the economies are competing now. And so long-term, we're USD bullish. So you might say, well, why don't we just sell the euro? You could do that. But keep in mind that when I say long-term, I'm talking, 3 or 4 years. And so unless something changes fundamentally that drives those next legs down, you could be sitting in a trade for quite some time, right? So let's say your maximum risk is 2%. You could, be sitting in a trade potentially with a 300 pip stop for a couple of months, you know, and maybe it eventually goes, and how long is it going to take to get down to your target? You know, maybe 2 more months. So you could actually be in a trade for 4 months, averaging, you know, 0.5% gain, right? So, you know, this is always balancing. You got to be able to read it, manage the risk, and you got to balance everything out. I mean, the name of the game here is you know, making profit. So that doesn't make a lot of sense right now. Unless you're, you know, unless you're trying to protect the value of, you know, billions of dollars in euros, then maybe it does. Okay, so let's talk about price. I'm going to go with the pound first. Now you can see that the balance of money intraday, that's the money that's being decided upon this hour, the next 48 hours. It's all leaning towards the downside right now. Now, if I drop down to the 5-minute chart, you'll see that this kind of, well, let's go back and look at where the key level would have been. Okay, so the key turning point would have been right here. That's the point where the buyers and sellers were at that moment in time, were at 50-50. And then once the sellers push through and close below that level, the sellers gain an advantage. And here they start to get a high probability advantage, and they've been stretching out. Now, what I want to do, we don't just trade indicators. We don't, you know, trading indicators and candle patterns and chart patterns, that's like being superstitious. It's not quite that bad, but it's almost that bad. A superstition, you know, don't walk under 11, a ladder at 7 years, bad luck. Okay, well, that's just some painter trying to scare the kids into not walking under the ladder and knocking it over while he's on it. Okay, so that's what that's about, right? So, and what I'm pointing out there, and you'll hear some more stuff coming out from me. I'm talking about a symbol of the behavior versus the behavior itself. And what we want to do is we want to look at the behavior. The behavior is when price is advancing and the sellers have an advantage. It takes the steam out of the buyers. And so what this does is this causes a natural reaction at some point of a pullback, and then the other traders want to jump on and move back in that direction. Very simple. That's real behavior. There's no, I mean, if there's a symbol, here it is. It's the 3, 4, 5 of, you know, what some call the Elliott wave. That's the only part I use of the Elliott wave, by the way. 3, 4, 5, because that's the part you can count on. That's the part that's high probability. That's this pattern right here. All right, so let's drop down to the 5-minute and take a peek. Now, what I'm noticing here, and I'm using a specific technique that I developed called New Wave Fibonacci drawing, and need to drop this down here now because it's made a little bit more of a move. If you don't know how to do that technique, let me show you where you can get it. Go to my website, forexartofwar.com, and you'll see this this spiral here, this Fibonacci spiral, and watch that. It will teach you how to do it. It'll be one of the most valuable tools you'll ever learn in Forex trading. Okay, so that's the technique that I'm using. It has specific starting points, and what it does is if you draw it correctly, it tells you when the buyers or sellers have an advantage and how strong that advantage is. It also gives you a great idea of, you know, is your range of advance big enough to get in and out with good risk management. So do check that out. All right, so what I'm seeing now is we've had this is so strong, it hasn't actually pulled back to 38.2 or more. So there is potentially a trade here. Now it's this range of movement is about 46 pips. So it's pretty strong. All right, so we're looking for what on the pound right now? Well, basically a pullback. Now let's zoom out just a little bit and see if we've got any additional risks to consider. I'm going to go out to the 30-minute. We have, these areas are so far back in time. They're still part of the same fundamental story now. That's one of the things you got to understand. Barriers in the past, they're relevant if they're part of the same fundamental story that we have today. And these actually are. So, you know, there is some buyers that are interested in this area right now, which is why it stalled a little bit. But the key level that I see that's going to be the most important is going to be right here. And let's just zoom out to the 4 hour just to make sure. Yeah, that's our low, 155.97. Okay, coming out. All right, so we've got, I think, lots of room to move here. So each trader, depending on, you know, their personal trading style, they're going to have to manage their risk in some way. Now, a lot of times this is so bearish, it just keeps going. And then what happens is a lot of the energy is expended, and you're not going to get a shallow retrace to 38.2. You're going to get a little bit more before the traders jump on. So a little bit tricky to manage your risk there. Moving over to the euro, which is more interesting this morning. Let's go back to that long term. We've got price coming through a key level here. It's pretty obvious, 24.27. We love when it's just obvious that the sellers have gained an advantage here. Now the next level, the low, is 23.67. So looks like we've got plenty of room right now to move in that direction, about 40 pips from the low. So now what we want to do is we want to zoom in, and we want to take a look at this behavior a little bit closer. If it's already pushed, pulled back, pushed again, there's nothing to trade, right? Unless you're trading a different, you have to be bringing fundamentals into play if you're trading something other than that pattern. So let's zoom in. Let's go to the 5-minute. Let's get that lined up. Okay, this is looking pretty good. Now, what I want you to notice here is when it came through this level, 124.27, look at it. It comes through. These are 5-minute candles now. So then it pushes all the way back and pushes back down, confirming pretty much a bearish tone. This gives the sellers a little impetus to move further. They push down and push back again. So notice there's a push down and a push back of at least 50% right here. So the real level, so the new wave that's advancing price starts here and moves to here, and it's right now it's only 14 pips. And so what we'd like to see is at least 18. And so we have an 18 pip new wave right now coming out of 24.27 with a pullback to 38.2. The problem again right now is this range of advance is not very strong. It's about 13 to 14. Okay, so is there a trade there? Potentially. I think you got to have a lot more skill to do that. I mean, most of our traders would want to kind of get our stops behind here, but potentially, if you're looking at the bearish look of the pound right now, you might say, you know what, that's enough. But the bottom line is, you have to know how to read the probabilities, which is what I do on this show. I'm giving you all the probabilities of what's likely to happen next. It's a little bit up in the air because the range of advance is kind of weak. We obviously have a seller advantage, but the range of advance is weak. So what that does is that kind of makes your risk hard to manage. So let's say, for example, you wanted to put a stop in right here, you want to enter right now, and you wanted to target before it got the low. That amount of movement is so small. If you were trading, say, the pound dollar, for example, and your stop was less than 8 pips, and you lived in the US, you might not have enough margin, which our margin is very limited here. You might not have enough margin to actually even enter the trade. So that becomes a factor too. But I think this is looking bearish. It's come through an important level, but we'll just have to watch. I'll take a quick look at the Australian dollar this morning. It looks kind of similar. We do have a lot of buy orders sitting in this area. You can see them. They're just all through here. And so it's no wonder that they're buying at this level. And if it pushes down, they're going to run into more buy orders. So that's something that we'd see. It's not even behavior. We know from looking at this, the orders are sitting there. Over to the New Zealand dollar. I don't really favor the Australian dollar and Kiwi. I don't follow their fundamentals closely enough, and I'm not interested in all of the nuances that move this pair, like, what's going on in China and commodity prices and things like that. I do pretty well just stand on the other majors. But here you can see it's really choppy moves. The balance is to the sellers. There is room to move into this area, but it's very choppy. So going back to pound again, looking for a pullback right now. Going to the euro, we've got a small range of advance, sellers in control with a pullback right now to about 50%. Okay, so just one last thing, just to remind you again, you can get those free books at forexartofwar.com, and also check out my training program, and be sure to email me if you have any questions. All right, so To our members, I'll see you guys in about an hour in our live trading room. Look forward to meeting with you guys. Make sure you guys bring your questions, and we'll address absolutely everything. You guys have a great one. Hope you got something valuable out of the session this morning. Bye now.